Bob Pisani now. He's got today's ETF Edge for us. Hi, Bob.
See you. With the elections over, the ETF world is buzzing about how the Trump presidency will impact the ETF business. How are hopes for tax cuts, less regulations, more tariffs impacting what investors will be buying in 2025? Let's talk with Matt Bartolini. He's head of Americas ETF Research at State Street Global Advisors and, of course, owner of the Spider ETF business. Matt, I call you the master of ETF flows. You see everything. You tell me you've seen some big moves in the last few days. Tell me what they are.
Yeah, I mean, just the one day after the election, ETFs in the U.S. took in over $22 billion, which is the largest amount of flows one day after election ever, just shattering the prior record in 2020 when there was over $5 billion of inflows. So just a massive influx of capital into the ETF marketplace. Some of the beneficiaries are just U.S. equity exposures overall. They took in $17 billion on that day. And within that, small caps, those more domestically oriented exposures that could perhaps benefit from the reshoring and protection of U.S. manufacturing that we've seen out there from the campaign trail. But then also financials. Bank stocks uniquely benefited. We saw over $2 billion of inflows into bank ETFs because you have those policies that may be reflationary, but also the potential for lesser regulation. So just a significant amount of capital that was deployed into the equity exposures in the ETF marketplace.
I want to go back to that bank one because you manage, State Street manages the Spider Regional Bank ETF. That's the KRE. And you messaged me last Wednesday that the KRE had inflows that were 36% of the fund's assets in a single day. I've never seen that. That's got to be a record. What is this telling you about what investors are thinking here?
I mean, it definitely was a record. It was $1.8 billion. It went into the ETF. And on that day, the fund itself was up 13%, which was a 7 standard deviation move over the last trailing 1 year. And we saw a significant amount of optimism towards that marketplace because of the policies, but also some of the foundations that banks are standing on. You have supportive earnings growth. You have a resilient consumer that is spurring additional loan growth. And now you have the potential for policies that will lead to lesser restraint or lesser onerous rules towards bank balance sheet, and that could improve return on invested capital.
Right. So I want to go to crypto. You also mentioned me. We went back and forth in emails last week. Big inflows into crypto ETF. State Street runs the Galaxy Digital Asset ETF. Deco, you launched that in September. But it seems like the big winner here is Cathie Wood and her ARK Invest ETF. She's been called a Trump proxy. She's got Tesla. She owns Coinbase and Robinhood, her top 5 there. It's a 2.5-year high. But Cathie's seen massive outflows in the last 2 years. So my question is, can people like Cathie Wood associated with speculative tech start attracting inflows again? Is this an opportunity for her to make a comeback?
Well, I think just taking a larger picture or a larger view of this picture, when we think about crypto and cryptocurrencies in the digital asset space, I think there is a good mixture of winners and losers. And I think a lot of the headlines are going to the spot market. But one of the things that everyone should appreciate is that the crypto industry is going to be met with an administration that is more crypto friendly. That's going to lead to lesser regulation or lesser hurdles that should lead to greater adoption of cryptocurrencies within our financial institution. So I think in this space, whomever the manager is, having that active view to sort of decipher where regulatory headwinds and tailwinds might be as this industry continues to mature and become a larger part of the financial marketplace. So I think this is something that should be on everyone's radar. I know some of the spot market gets a lot of the headlines, but there's a lot of potential opportunity beneath the surface, particularly in that ecosystem supporting overall digital assets.
Okay, we're going to have a lot more coming up on Trump ETF trades, as we like to call them. That's coming up on ETF Edge, 1:10 p.m. Eastern Time. Matt will be joined by John Dobby. He's the founder and CEO of Astoria Portfolio Advisors. That's etfedge.cnbc.com.